As you can see, I have your fellow UK brethren here visiting me. I figured what better guy to bring along for this interview than someone who has understood Glint probably longer than I have, and someone who I think would add a lot of color. Mario and Echo's here with us, so thanks for letting him jump on.
Nice to see you, Mario. For those of you who don't know, you should do. He's the host of Manako64 YouTube channel, known, as he says, every day as the home of alternative economics and contrarian views. And today we have a very special guest with us, Paul Smith. Paul is the co-founder of Touchstone Education. Hi, Paul. Nice to see you.
I genuinely believe the thing that's going to make any of us different, wealthy, if you want to use that word, is the quality of the questions that we ask. Wealth for me is where you own assets that provide you with an income in exchange for none of your time. It's foolish in the extreme to be dependent for more than 25% of your income on anything, whatever it is. You should always have a minimum of 3 income streams that can sustain your lifestyle.
And I've always thanked my father for that. It is the best gift I've ever been given, to respect and understand the laws of compounding, to have it work for you instead of against you, as most people do in life and are constantly trying to keep up with the Joneses.
Most people don't understand how incredibly spectacular, unique, and fabulous they are. The chances of one of us existing is hundreds of millions, if not trillions to one. You are all unique, superb human beings. There's only one person that's going to stop you from achieving whatever it is that you want to achieve, and that's you. So just believe in yourself. The rest is easy.
Hello, everybody, and welcome to another episode of The Resilient Compass. As usual, I have my co-host, the Bullion Baron himself.
Makes me laugh.
Andy Scheckman. And
good to see you, Jay. Good to see you. And thanks. As you can see, I have your fellow UK brethren here visiting me. I figured what better guy to bring along for this interview than someone who has understood Glint probably longer than I have, and someone who I think would add a lot of color. Mario and Echo's here with us, so thanks for letting him jump on.
No, that's great. Nice to see you, Mario. For those of you who don't know, you should do. He's the host of Manako64 YouTube channel, known, as he says, every day as the home of alternative economics and contrarian views. And of course, Mario covers markets and monetary policy, of course, precious metals, economics, etc., and offers a very interesting pod for those contrarian thinkers of you out there. And today we have a very special guest with us, Paul Smith. Paul is the co-founder of Touchstone Education. Hi, Paul. Nice to see you.
Hi, Jason. Fantastic as always. And hi, Andy and Mario.
Hi, Paul. Good to see you, sir.
So I'll let Paul explain in a minute what he does, but he's got a leading UK property investment training company. He's got decades of experience. He's been in senior roles within the industry, and he's built a multi-million-pound property portfolio. And he's incredibly spending a lot of his time now trying to share those lessons he's learned about how he built his wealth through property investment with others. So I'm very glad to have you on the pod today, Paul. Super excited to talk to you today. So yeah, should we start with what on earth motivated you to start Touchstone Education, and what makes that unique?
Yeah, I'm stereotypical normal guy. I left home at the age of 17 with 170 pounds.
I'm not sure we could call you normal, Paul, but
is anyone really normal? I decided that what I wanted to do was I wanted to buy a house buy a home before I was 18. And with a grand total of 170 pounds, that isn't going to get you very far. I've always taken a fairly direct line. I've always taken the view that if as a race, as a species, we can land men on the moon, then buying houses isn't that hard. And I decided I wanted to do this before my 18th birthday. Now, the little but there is that if you're not 18, you can't get a mortgage. So I needed to buy it for cash. So this brave 17-year-old strides out into the world on his own, promptly starts 3 different jobs, which was providing me with a decent level of income. So I was doing about 100 hours a week, working 3 different jobs. So this whole concept of the gig economy and a side hustle and all that stuff, that's as old as the hills. But I genuinely believe the thing that's going to make any of us different, wealthy, if you want to use that word, is the quality of the questions that we ask. So the quality of the questions that I asked at that point were, how can I buy a house before I'm 18? How can I earn a lot of money? But most importantly, probably, how can I live for nothing? And this was before the internet, before mobile phones and all that stuff. So I saw an advert in the old days when they used to be actually printed in newspapers. And it said, staff wanted. And I went to live in this big stately home. And I lived in the servants' accommodation as a servant. I did 20 hours work a week and sweeping the tennis courts or cleaning the pool or pruning the roses, whatever they wanted me to do. So I had 3 incomes and no expenditure. And I managed to save up the princely sum of £9,000. And I went and bought myself a flat, 269A Roman Road, East Ham, London. And that flat, that apartment, is now worth more than £500,000. And I just didn't stop. So my strongest view, to come to your actual question, why did I start Touchstone Education? It's essentially, here it is. If I can do it, anyone can do it. And if you want to be a millionaire, if you want to be wealthy, it's very simple. You got to put the work in, you got to get the education, and you got to do things. Because if you just sit there moaning about stuff, I quite often tell my students, I don't believe there's a house fairy. So you know when the kids lose their teeth, there's a tooth fairy. Do you have the same thing in the States?
Yeah,
so
of course.
You lose a tooth and you put, I don't know, what's tooth fairy inflation these days?
Yeah, now we're paying 1 ounce gold coins.
My son lost his tooth the other day, and he said to me, Daddy, he said, sometimes you can get, it's not just shiny coins, sometimes you can get paper money. And paper money, Daddy, buys you more than the metal money now.
What I talk to my students about is that there's no such thing as a house fairy. You don't wake up one morning and somebody's put the deeds to a property underneath your pillow and you're like, you suddenly got a property. So you got to get off your backside, you got to go get it. But if you live in the States, if you live in Europe, I think we've all won the lottery, is the other strong core belief that I've got. You compare our existence to somebody born in Russia or China or North Korea or the Sudan or most of Africa. We've won the lottery. We got freedom of speech. We can go out and make some money. Yeah, okay, there's various levels of taxation that drive us all nuts, I'm sure. But essentially, there's no actual limit to the amount of money that we can earn. And how much or how little you make is on you. There's nobody else responsible for your finances. It's just you. And if you want more money, go earn some more money then. No one's going to stop you.
No. Are you enjoying the show? A quick reminder then to hit the subscribe button so you can be kept up to date about future episodes. Now, back to the show. What do you think around the fact that my parents' generation seem to have had an easier time about it than, say, the younger generation coming through now, where if we go back to the year I was born, of course, I think a house costs $17,000. The average US house, anyway, costs $17,000. And I think we've talked about this before, Andy, and I'm sure you, Mario, have talked about it before. That house in gold was worth what, about 17,000 grams? Something like that?
Yeah, I actually looked the other day. In the UK, the average house price was about £5,000 in 1971, something like that. So it's actually gone up about just over 50 times. But gold has gone up like over 125 times. I'm not saying houses are not good to have, but I'm saying, yeah, they're good to have. They hold their value. But Paul, don't you think nowadays for young people, it's a lot harder, especially if you are in the greater London area, to save up to buy anywhere because they've inflated the housing market.
Not only have they inflated it through interest rate suppression since 1982. So asset prices have become for those people who were fortunate enough and industrious enough like Paul to buy his first home back in the 80s, when interest rates were sloping down from that point. For the last 30 years, we've had interest rates that have been falling until just recently, giving asset prices a supercharge. Absolutely, 100%. And to your point also, guys, I used to do a presentation on this, and I'm going to do this from memory. In 1960, the average price of a home in the United States was 17 grand. Exactly. And that's what the census, 16,970 or whatever. That's what the Census Bureau says. And gold was $39 an ounce. You do the math, it comes out to $435, 435 ounces to buy that house in 1960. If you wouldn't have bought the house and with your gold that your grandfather left for you, those 435 ounces, and instead you took out a mortgage, here we are 60 years later, and the gold hasn't earned anything but dust, no interest attached to it. And that gold that you could have sold for $17,000 is now worth $1 million. So that's the only issue that I see facing the younger generation, is that interest rates have been suppressed for a long time, which have created questions about what really is price discovery. And as rates go higher, I think the younger generation will really take value in what you're teaching them, because I think you'll see some sort of a rebalancing between asset prices and higher interest rates. There will be many opportunities for younger people that maybe don't see them right now in an environment where asset prices are still rather inflated.
Can I add one thing about Paul's experience that I like is that he did it through hard work and saving. He didn't. Nowadays, whenever people think about property investment or real estate, they borrow a lot as well. But I think hopefully interest rates and yields are going to keep going higher, and we might finally see some kind of correction in prices, so younger people can get on board as well. But I think the politicians are going to try very hard to keep house prices elevated, though.
I'm finding it hard to disagree with anything you guys are saying. I just maybe add a few different perspectives. Perspective number one, leverage. You mentioned that people borrow a lot of money to buy houses and whatever. It's an inescapable truth that you can buy a property with a small deposit compared to the value of the asset. You can't do that. If you leave home at 17, 18, or you're 25 years old and you got your first job or something, yeah, fine. I can now, with my private bank and my Lombard facilities and whatever, I can borrow money to buy gold. Most people can't. But almost anyone can borrow money to buy a house. And my view, for what it's worth, is in the UK and in Europe, it's certainly the easiest way to become a millionaire is to do it through property, because you need relatively small amount of your own money. As well as the asset inflation, you also get the rental income. But I think to consider it as a professional property investor, just in the context of residential property, is to miss the big picture. The projects that I make the most money on these days are commercial property. And to give you an example, around about a year ago now, I bought a property for, let's call it round numbers, a little bit less, but round numbers, it's £1 million, 3 acres. And I don't even know what you would call them in the States. In the UK, they're called caravans. So it's like an RV, but it doesn't have a cab on the front. It's so you attach it to the back of a car. Do you have such a thing in the?
Yeah, that would be like a mobile home.
Yeah, but these are going to be a lot smaller than you're expecting in the States. So anyway, the reason for that question is this is a 3 acre site and it's storing caravans on it. Okay, so it's not where you go on holiday, it's where you keep it when you're not on holiday. And the income from that site was, when I bought it, around about 80,000. All I've done is I've raised the charge per caravan to the normal market rate. I bought it from a retiring baby boomer, so I was getting it at 50 pence in the pound probably. But the long-term plan, which I'm now executing, is to move it to a self-storage facility. So 20-foot sea containers. You get twice as many sea containers as you do per caravan. You get 3 times the revenue per sea container than you do for caravan. So I'm basically bumping the revenue by a factor of 6 plus a 50% increase. Long story short, I've taken £1 million site and I'll be able to sell it in about 6 months' time for between £6 and £7 million. So you can do things like that with property. You can add value, you can change the use, you can remodel, you can refurbish. How are you going to add any value to a kilo of gold? And don't get me wrong, I'm a huge gold fan, but if you've got 10 kilos of gold, how are you going to times the value by 6?
No, and I think your point is well taken, and I look at it a little bit differently. I look at what you're doing as wealth accumulation. I look at then taking some of those profits, putting them into wealth preservation, and it's a cycle that continues. And I think that's the lesson that I would take away would be that you have shown ways that have been proven for people to increase their wealth, to exponentially increase their wealth using leverage. The mistake that I would see people making universally, whether they be gamblers in a casino who never know when to get up, or people who have succeeded in choosing the right investment and never knowing when to exit. So that's one of the things that I've taught people along the way is to keep your investment, keep making your investment, but siphon off some of the profits and reallocate it into something like gold. And I think you're right. The point you make is fantastic. In my life, the people that I know that have the most wealth have done so through real estate. There is no question that's not really possible with precious metals, but I think they certainly are very complementary to one another in not only building equity, but also in siphoning off profits so that you always are winning at the end of the day after you're making that profit rather than continuing to speculate.
110%. Couldn't agree with you more, Andy. And that's something that I teach my students is the quickest way to become a millionaire, in my view, is through real estate. The quickest way to go from 7 figures to 8 figures is then by having a diversified portfolio. And right front and center in the middle of what I mean, and you also describe it exactly how I describe it. Wealth creation and wealth protection are the two different elements that I talk about. And to protect your wealth, I was talking to my wife 7 years ago now about what would happen to the value of our UK property portfolio if and when a crazy Labour government got elected. And okay, I was slightly out in my timing, but it just happened. And so 3-4 years ago now, that's one of the core reasons that we moved to Monaco, got several passports, and started investing in assets that the state couldn't confiscate, because that's the other element of it that's important to me.
We've talked about some of the challenges that people have had, the fact it's very different. You've explained what you believe in. But for those people out there, especially the younger ones, where does Touchstone Education courses, where do they start? Like, who are they designed for, I suppose, is the question.
Okay, so I guess the core, the audience, the consumer groups that come towards us are typically more ambitious people in their 20s and 30s. I'm not only, it could be 40s, but let's just call it younger people that have maybe got not a huge amount of capital, but they've got a lot of drive, a lot of aggression, and they've got time. Now, time doesn't mean that they're not working a job or maybe even 2 jobs. It means, like me when I was young, they're okay with doing 100 or 110 or 120 hours a week. You don't want to do that forever, but it's more likely you can do that when you're 22 than when you're 72, is all I'm saying.
Yeah.
The other big part of the marketplace that we serve are people in their 50s and 60s that have they haven't been red pilled, to use that wonderful expression. They've been stuck in the matrix. They've been through the normal education system. They were foolish enough to believe that the state was going to look after them. They were crazy enough to believe that all they needed to do was get a good job, maybe get a degree and whatever. And now they're in their 50s and 60s and they're thinking, my life isn't going to be so clever when I retire. In fact, can I actually retire? So they've maybe been 6-figure earners throughout much of their career, but they don't have any assets. They have no wealth. And a core part of what I talk about is wealth. So let's make sure we're all in the same place on wealth. Wealth for me is where you own assets that provide you with an income in exchange for none of your time. And that is the state of being that I aspire to get myself to. And that's what we're primarily helping other people to get.
This is the resilient compass. Do you think you've talked about long hours, putting effort in there sometimes, especially when you're younger, you don't have assets. What do you think do you think resilience is important in this process? And what do you think defines that?
I think resilience is absolutely key. And let me share with you some statistics that I find absolutely shocking. I'm not in the UK anymore. I haven't been in the UK for 4 years. And increasingly find it difficult to motivate myself to go back, other than to see friends and family. It's like, why would I want to be there? There's 11 million people in the UK. Let me put that differently. That's 25% of the workforce. So if you define the workforce, it's between 18 and 65 years old. There's 11 million people that do not work. They're not unemployed. They just don't work. How the hell can you run an economy of any kind where it's okay to just not work? And what is it? Is it the welfare system is too strong? Is it the healthcare system? And there's no moral or ethical imperative to actually get off your backside and go and do something useful. They just choose not to work. And if you try and understand why people are doing that, very often it's that they feel that life's not fair, or that they're owed more, or life owes them a living. And I can help almost anyone, I believe, with the exception of the people that believe that they have no responsibility for themselves. Those people, I would argue, demonstrate a lack of resilience. And if you look at the UK and the US, the statistic that strikes me the hardest is that between 20 and 25% of both populations are actually being treated and diagnosed and medicated for depression. When somebody finds it difficult to make a decision, when they procrastinate, that's nothing other than a depression response for me. So resilience, if you define it as not being depressed, not believing that the world owes you a living, believing that you're responsible for yourself, if that combination of things is in any way descriptive of what you might mean by resilience, then I would 100% agree with you. Because you're not going to stop life knocking you over. We all get knocked over. Are you going to stand up again? Or are you just going to lie there and moan about it?
Yeah, I think some of it comes back to what you said at the beginning, where you said, I think we live in one of the most fortunate times in our history. We've never had it so good. Because I think that if people realize how fortunate they are, then I think you'd have a different attitude. And certainly I grew up as a young boy hearing stories about World War II. It wasn't that long ago. There are people who are dying at 105 years old, that kind of age now, and they were young people during World War II. And okay, but we're entering a time when that's becoming a very distant memory. People don't have that conversation around them anymore. And we don't seem to have a kind of can-do attitude. Look how lucky we are. Let's get our head down and get on with stuff. Culture, as for instance, you have in the US. And I don't know what you think, Andy, about what I'm saying and what Paul's saying.
No, I think it's when we were all kids before the conveniences of life these days, the social media, the phone, the concept of work was different. And now with the rise of asset classes that explode in value, and I don't believe that's how markets work. You have a generation of people where instant gratification is not fast enough. Putting in the work and the effort, formulating a plan and following it through and putting in the hours and the time is something that's very difficult for a lot of people to even comprehend, when all you need to do is put $5,000 that you somehow scrape up into Bitcoin and become a centimillionaire. And I'm being somewhat euphemistic and tongue-in-cheek here, but the point of it is that I think a lot of it has to do with the times we live in. A lot of people just have looked past traditional ways of becoming successful, rolling up your sleeves and putting in the time, and instead there's a gambling mentality, whether it be the rise of actual gambling, and now all of a sudden you have all these young kids playing Texas Hold'em and playing poker and gambling and running into trouble there, and then translating into the way they invest in very speculative things. In fact, last week, as an example, I think it was last Tuesday or Wednesday, was an all-time record on the NASDAQ market of all time for stocks that traded under $1. Purchases in one day of stocks that trade under $1. which is emblematic of these penny stocks, are emblematic of speculative frenzies, speculative mania. And it's much easier for people to try and rationalize getting wealthy quick, getting rich quick, without putting in the effort. And maybe this is what people have said about the previous generation or the next generation all the time. But I see it myself. I have 3 kids, and I know that there is not only somewhat of an entitlement issue where kids are growing up and their families have been able to provide for them. Instead of having to leave the house at 17, they pay for them to go to 4 years of school and make it a little bit too easy for them. And the mentality on a lot of people is you just need to put your money into Bitcoin or into some Dogecoin and you become wealthy. And I'm not trying to overgeneralize, but I think what Paul is saying is the key to my success. And that is to put in the time and the effort and the education and make yourself better and have some skin in the game and let the concept of time and the laws of compounding become your friend. And to do that takes a plan and some follow through and stick-to-itiveness, which isn't really a word, but the concept of compounding of time and of effort, to me, is what's made me successful, even in the way that I invest. When I started my company with my father, I was 19 years old, before the internet, in 1989. And he said to me, "You'll buy something, gold or silver, every 2 weeks when you get paid without fail, or I'll fire you." Well, I've owned the company for over 25 years outright. He won't fire me any longer, but I have honored that promise to him, and I have purchased gold or silver every 2 weeks for 35 years. Next month will be 35 years. I have never missed a 2-week period, and it's the best gift I've ever been given. To understand the laws of compounding, to have it work for you instead of against you. And I think, to me, that's the main difference, is that compounding and time takes too much effort these days, and everyone wants to take a whole bite of the apple instead of letting it happen little by little. So I don't mean to go on a diatribe. I just think that, to me, that's the main difference, is the understanding of compounding, of effort, of work, and rolling up your sleeves. And that's falling by the wayside, I think, at least here in the States, with younger generations. Not to pigeonhole all these young people, but that, to me, is the biggest difference.
Can I add something to that? I think one of the reasons why the younger generation are going for like gambling and trying to make it big.
Coin?
Bitcoin. The reason for it, though, is it's just a symptom of our monetary system, which I think is on its last legs. And by that, I mean that the currency doesn't buy anymore as much. Yeah, they tell us we only have 2% or 3% inflation, but I think that's not true. So it's much harder for younger people to get onto the property ladder, or much harder to do things. And so, yeah, there's a mixture of this entitlement culture that Paul was talking about, which I totally agree. The best way to not be depressed is to always be doing something. So if you don't do anything, you're going to be depressed. But I think, it's a symptom of the monetary system that it doesn't pay to work anymore. And it happened like in 1790s France, when the assignats collapsed, their hyperinflation. It didn't pay to work, so there was a lot of gambling as well. Same thing in Weimar Germany. But it will end, and that's the good thing, because things go in cycle.
My dad graduated college in 1963. And he was married to my mom already. And he told me just the other day that $6,500 a year for his first job allowed him and my mom to live comfortably in 1963. So when you talk about inflation and how it is eroding away, I just paid the semester college tuition for my daughter at the University of Wisconsin-Madison. And it's $35,000 a semester. You're spending $70,000 a year to send kids to college. That was 10 years worth of income for my father when he graduated college in 1963. So you're right. Maybe that's part of it too, is that it's just becoming so expensive to live that kids feel they have to gamble rather than suffer the way that Paul did, leaving his house at 17 with 150 pounds in his pocket, and through time became a very successful man with a beautiful home behind him there. That just takes too much effort, I think, for a lot of people. That's the sad part of it. And you're right. How do you run an economy, Paul, to your point, when you have that and you're not producing anything and you have people who are entitled and gambling? It leads to a very bad place. So that's why I think what you're doing and educating people is not only admirable, it's vitally important. I hope people take advantage of it.
Thank you. What fascinating thoughts there. What do you think, guys, about the NASDAQ and the tech stocks and the Magnificent Seven in specifically? Is that not just gambling?
Of course it is.
And I say that I'm a fundamental investor. I'm with Buffett, and I love the idea that you should only buy a stock that you don't care if the market shuts for 10 years, because you're just going to hold it for 10 years anyway. But I was just looking at NVIDIA last week, and it's on a forward PE ratio of 54, and it's got a dividend yield of 0.0027%. So if you bought $1 million worth of NVIDIA stock, an investor like me wants to get some dividend as an income. If I put $1 million into NVIDIA, it's going to give me $270 a year. Is it?
It's insane. It's
Is it just
insane.
me? Or is it just like
No,
everyone's?
that's not just you. Back in the day, a value investor would not buy a stock unless it was trading at a single-digit PE ratio, paying a 4, 5, 6% dividend yield. And now the cumulative dividend yield on the S&P is under 2%, and the PE ratio is 25, 30 to 1 or higher. In this case, NVIDIA. But when you look at the market breadth, where there's 7 stocks holding up the entire industry, and the Wilshire 5000 or the Russell 2000 are all getting hammered, it's gambling, it's speculation. And even more frightening is you're seeing 6-to-1 selling with the insiders versus buying. So as the insiders are leaving because they understand the fundamentals that you teach, and the speculators, the young people, and anyone who wants to take part in becoming wealthy, just so easy to do now, that they're jumping in, ignoring the fundamentals, ignoring the hard work, not putting in the time. And it's a very dangerous thing. And I think it's never been more important to rely on education. And that's, again, coming back to what you're doing. So many of the people who are doing this are uneducated. They don't understand the fundamentals and are just following the herd. And that's why so few people ever succeed in investing, because they're following the masses, and instead of becoming educated and leading the masses.
Sorry, Jason, I've got very few publicly listed stocks because that's not where I put most of my money. But to give you an example, and I'm not recommending this, everybody don't all rush out and buy this particular stock, but I just want to talk about it because it's the kind of stock that I buy. It's Volkswagen, but it's Volkswagen preferred stock, which is the biggest car maker in the world. And they've got a PE ratio, wait for it, everybody, of 3.
Wow.
PE of 3. And the dividend yield on the stocks that I've got, and okay, for everyone that doesn't understand what's preferred, what's non-preferred, yes, I get a slightly higher premium, but I'm earning 11% a year as a dividend. Now, I'm quite happy to take a position in a company that's got cash flow coming out of its ears, paying out 11%, and is on a PE of 3. I'm okay with that. I am not okay. And they happen to be the biggest and the best in the world at what they've done, and they've demonstrated that over a very long time. I just can't get into the heads of people around the world that I just chuck it, because you're talking about gambling. I just think it is absolute casino mentality with those Magnificent Seven in particular. I can't fathom it. And well, man himself on the screen there, Hathaway just liquidated about, well, just over the last 18 months, they liquidated about 50% of their holdings, and he's sitting on, what is
400 billion?
Yeah.
Hundreds of billions of cash.
Yeah, he knows something. But listen, I think there was a prescient. I had a prescient moment on Friday. I bumped into these 2 young men in their 20s, and I was talking to them as, what does your day look like? They get up at 6 a.m. They go to the gym straight away. It's very important for them. Like, resilience for their physical health is really important. I remember one of my mentors saying to me a long time ago, you've got to be fit if you really want to leverage life. And then they're working together on a new business, and they're living and breathing it. They're putting the hours in, Paul, that you talked about. And when they go to bed, they don't take their mobile phones to bed. They take their books to bed. They read books. And then one of them explained to me, I said, so I'd heard that he used to be, I know he's in the he was a young medical professional. He said, no, I bought a house in the Lake District, and he buys this house And he shows me pictures of it. And it's a bomb site, absolute bomb site. Sorry, it's not a literal bomb site, but it looks like one. Yeah. And he bought this house, big house in the Lake District, but no one wanted to buy it. It was a big project to do. And I think he must have been on one of your courses, because he goes into this with confidence. I don't know how he saved up for the deposit, but he gets the house, and it's about £400,000 for the house. So it's a lot of money for the house, but it's a big house. He decides he's going to refurb it, and he's going to have the top as a house and the bottom as an apartment. And I thought, that must have cost a lot of money. He said, I did it on my own. What do you mean? They said, I hired a builder to work with me, one guy. And then I said, I did the whole thing up. And I said, since when did you know how to do all of that? He said, I didn't. I was on YouTube. He said, everything's on YouTube, from presumably the strategies that you talk about to how you plaster. I said, can you plaster? He said, yeah. I said, how long did that take you? He said, about a day. He says, the first few attempts were pretty terrible. And then by the second day, I'm doing quite a good job. I think he said I had to get an electrician for a couple of jobs and things. But he showed me the photographs, and they literally did everything. Took it back to the brickwork, first fix and everything. And he's learning. He's confident. It's just confidence, if you ask me, a lot of it, and a willingness to believe that you can do it. And when he showed me the photographs and the videos of the final thing, and it was unbelievable quality, like really high spec. He's now renting the apartment and the house, two separately, on Airbnb, and he's making £100,000 a year on that. Now, I don't know whether you think that's good, but I think it's a big shout out to you guys, from me, who I spoke to on Friday, for doing an amazing job and kicking the trend and believing you can do something, kicking out of the park. But can we just go back to those courses that you give to people? What do they look like? What kind of support do you give people? How do you mentor people?
Yeah, of course. So we want to make sure that people understand what they're getting into. So normally I've written a few books, so people might read one of the books, they might come on a free webinar. And the first real stage, I would call it the toe in the water. We have a 2-day online, everything's online, 2-day online seminar. We call it Wealth Through Property, and we charge for it. It's £99. But it's not really that we want anybody's money. We want to make sure they're serious, and we want to make sure they've got the discipline to turn up for 2 days. And then the courses that are scrolling past on the screen now, that they're all online. We fervently believe that to be a property investor, to be an investor of any kind, the most important thing, there are two most important things: a knowledge of structure, tax, the mechanics of money, understanding good debt versus bad debt. So one of our foundational courses is called Limited Company Essentials. In the States, that'd be an LLC. So it's the practicalities of how do you actually start a company? Why is it better to run it as a company as opposed to an individual? Because even that terrifies most people that haven't had exposure to it. But it's in reality incredibly simple. The other thing that I would argue is as important, if not more important, because it goes to the root of every investment class, is mindset. The skill set without the mindset is just going to leave you upset. I don't know if you heard that before, but if you can be the world's best, whatever, insert word of your choice, if you don't believe you can do it, if you don't have that network of supportive friends, so those are the two foundational courses. Then after that, there are various, so is it commercial property? Is it residential property? Is it serviced accommodation, which over in the States would get called vacation rentals or urban vacation rentals? So I've been in the States long enough that I can translate roughly. So then after that, so once you've got your foundational courses, and all these are about a 2-day course, by the way, they're all recorded, they're all online. We refresh them all every year because the budget, the rule changes, the tax changes, everything gets updated every year.
Is this just UK focused, Paul? So for the people in the US?
I would say 70% of it is international. 30% of it will be UK specific, but round about 40% of our students are international. We got quite a lot of students from the States. It tends to be from let's call it the English speaking diaspora. It is so, Australia, South Africa, wherever, but there's actually a decent chunk from places like India and wherever, because it's the fundamentals of, as we already discussed, creating and then protecting wealth. And there is a significant fee at that point. So somebody that comes on the 2 days, we will say, okay, do you want to join what we call our Wealth Academy? Now, the Wealth Academy it's a 12-month program to begin with, an intensive 12-month program. You get access to all of those. There's 10 core courses. You get access to those core courses for life, with updates for life. But in that first year, it's really important that we build habits. How do you build a habit? We've got 6 learning streams: raising money, residential property, commercial property, etc. And there's a 1-hour coaching session 6 days a week on that. So you've got to be prepared to put in 6 hours a week of actual group study, collaboration, questions and answers. And it's designed for people that are serious about it. And this isn't something you can do in 10 minutes a year. You've got to give us 6 hours a week. And then you've actually got to go and do things. You've got to go view properties. You've got to remodel properties. You've got to buy properties. So we're really talking a commitment of between 10 and 20 hours a week. During that time, we've got some face-to-face sessions. Once a quarter, we run something called a deal clinic, where we'll typically get 1,000 of our students together, of our serious students together. Some people will bring deals along. Some people have got money that want to fund deals. So we got angel investors. It's a really positive, powerful group. And again, that access to those deal clinics is for life, because everything we're about is about the long term. So you join the Wealth Academy, you ain't getting out. You're leaving in a box. That's the view. Because people often say to me, what's your exit plan? It's very simple. It's death. At some point I will die, which means I will exit my businesses. Between this day and my last day, I'm just going to be focused on helping as many people as I can. And I don't know, people tend to have 2 views of that. Either 15 grand, that's a lot of money, or I could easily make a 15 grand mistake on my first property. And at the end of that year, we run surveys. The average person's added £1 million to their property portfolio, more or less. I'm rounding a little bit. And on average, they'll have added about 10,000 a month to their income streams. Now, will it be passive at that point? Probably not, because they don't have the experience. They haven't turned it into a business, but they'll get the support from us for life. And that's it. There's no other fees in the future. You've paid your membership dues. So long answer to a short question, Jason, but I hope that gives a bit of a feel.
Yeah. And I know that there's, I've talked to you before, and there's some phenomenal success stories. Could you share one of the success stories that kind of demonstrates the impact?
Maybe offer 2 at either extreme. There's a young lady called Lauren who was working minimum wage jobs, and she joined the Wealth Academy in January 2023. Couple of kids, married, and unfortunately, her husband had a kind of middle grade management position within a university. Now, unfortunately, the unfortunate part is that he developed a condition and he actually lost his sight, so he could no longer work. And who can predict these kind of things? So she made the decision, I'm not happy working minimum wage jobs anymore, stacking shelves or flipping burgers or whatever. Off she goes on her wealth creation journey. Just a few months later, her husband gets into a position where he can't work. Now, the reason they could afford to come on the journey is because of the husband's position in the first place. Roll the clock forward 18 months. It's not even, is it? Yeah, roll the clock forward 18 months. They are now running a service accommodation management business where they're looking after Airbnbs, whatever, for other people. And their income per month just from that property business is 35,000 a month. So she's gone from minimum wage to 35 grand a month. And what's that in US? 42,000, something like that, with zero capital, because they had plans, but because of what happened to her husband, they had to switch. So some of the strategies we teach are capital intensive, some are not. Minimum wage to 35 grand in 18 months, all whilst going through this kind of medical trauma. Give you a different example. A guy called Basil very successful guy, maybe less well known in the States, but in the UK, it's all over the place. Cladding on buildings. So there's been some disasters in the UK with tower blocks burning down, and it's to do with the cladding that was on the outside of them. This guy, Basil, started a business because he's a very smart engineer. So his day job, his engineering consultancy, is all about retrofitting these fire trap buildings and making them safe, which is just a huge issue in the UK construction industry at the moment. And he's making good money from that. Now, what he'd done, he's not many business owners, he'd just taken his profit, paid dividend on it, withdrew the dividend from his company, and went off and bought some properties in his personal name. Didn't understand that you should buy the companies in the properties in the company. Didn't understand that you didn't need to remove the dividend, pay tax on it. You could just keep the dividend in the company and use the company to build that property portfolio. So he understands all that now, and we've had to move those properties back into the company. But here's the key thing that many people are not even aware of. And I don't know, I'd be interested in your view on this, Jason. I'm not sure if we've ever talked about it before. Before he started his own business, he was a middle ranking manager with a county council. So he was a civil servant, and he'd got like 30 odd years service. And we were talking about pensions, because something else that we teach a lot about is pensions, how you turn it into a private pension, how you then use that to buy property. And his pension, when he retired at the age of 60, and he when I was talking to him, he would have been 53, 54, was going to be £20,000 a year. And he was working out, okay, so how do I adjust my lifestyle so I can get by on £20,000 a year and whatever? Not very exciting. So I said, why don't you ask for a transfer value? And he said, a transfer what? And I said, a transfer value. Why don't you just ask the local authority to transfer that money into a private pension that you would own? Because is it the same in the States? If you've got some sort of employer pension and whenever you die, the pension dies with you, or is that yours?
No, normally when you die, it would go to your heirs.
Okay, completely different system in most of Europe. So we've got a couple of schemes. So it's private pensions, basically. So you have a thing called a 401k, don't you?
Yes, a 401k or a self-directed IRA. A 401k is sponsored by a company, and a self-directed IRA is private. You are directing it yourself.
Fine. So it's the same thing.
That's a bit like a SIP, is it? Is what you call a SIP here?
A SAS.
A SAS.
So instead of this 20 grand a year that would have died with him, he writes off to the people using the letters that we provided. And within a couple of months, they'd give him a transfer value of £750,000. And he's taken that £750,000, and he's in the process now of buying many millions of pounds worth of commercial property, which you're allowed then to hold within the SAS. So he discovered that he had £750,000 that he didn't even know about. Now, he wasn't a stupid guy. The reason I told you about his other business and what he's doing, he's very successful there. So it's not a question of he wasn't educated or he was stupid or anything like that. No, he wasn't. He was a very hardworking guy, but he just didn't have the information. And you half alluded to it earlier, Jason. You say everything's on YouTube. You can learn how to rebuild a house on YouTube and whatever. That's fine. The question I normally ask is, if it's true that everything in the world is available on the internet, why would you pay for education? How come the North Koreans and the Iranians and the Iraqis, how come they're not nuclear powers? Because if everything in the world's on the internet, surely you could just go look up, how do I build an ICBM? Yeah, it's just not true, is it?
No.
Even things that are universally available, most people don't have the discipline. They haven't got the habit of using that information. So the information on its own is useless. That's just the skill set piece. In combination with other things, it becomes very valuable. But yeah, so zero capital to 35 grand a month and discovering you got £750,000 that you didn't know you had.
Brilliant.
Couple of examples. Give you as many as you want.
Yeah, I know quite a lot of people in that situation.
Inspiring. It's inspiring, and I hope people will take the time to check out what you're talking. You've piqued my interest. It's very inspiring. Education, knowledge is power, especially if you know what to do with it. That's awesome.
Thank you. Thank you.
And Paul, what do you say to, we're also the Resilient Compass looking ahead at all the challenges ahead and thinking about how you navigate them. And we talk about a polycrisis that's unfolding. And in certain parts of the world, people are worried about commercial property. There's been a lot that's been over leveraged, and now a lot of occupancy rates are dropping and things like that. And there's a reckoning coming. We've talked about that before. How do you advise people and help people navigate all the issues about rising interest rates and things like what I've just been saying?
Sure. I think the core of it is a balanced portfolio and understanding what a good, sensible, balanced portfolio looks like. I think it's foolish in the extreme to be dependent for more than 25% of your income on anything, whatever it is. You should always have a minimum of 3 income streams that can sustain your lifestyle, is one of my core rules. We're talking about gold here. How do we know that the United States government won't confiscate all the gold? Surely that could never happen. What was the date it happened?
April 1933.
Yeah. And you might be thinking, oh, that was bad luck. No other advanced economy would ever do that. What did Isaac Newton do when he formed the Royal Mint? He confiscated all the silver in the whole of the United Kingdom. So if you take a historical perspective on this and you ask yourself the question, how do you have an asset class that is impervious to what any one state or jurisdiction can do? At a certain level, you have to have a number of different jurisdictions. So I've got bank accounts in 5 different countries. I've got bullion deposits in 3 different countries. I've got multiple passports. So in the world that we're moving towards, your question is about commercial property, which is fine. It's an absolutely legitimate concern. My bigger concern would be, when was it now? 2020. So 5 years ago or 4 years ago, I actually spent the night before the UK got locked down telling my wife that the British government would never imprison its people. And then it imprisoned its people. My wife, by the way, just for context here, she's Hungarian. So she was brought up under a Soviet regime. And she's very used to assuming that dictators will be dictators. I suffered a fundamental breach of trust with the UK government, which is one of the reasons I moved, when they decided to lock me up for 2 years, or tried to lock me up for 2 years. They didn't. I actually moved to France. So what are the bigger risks? The bigger risks are loss of individual and civil liberties, loss of some or all of your assets. How can you counteract that? You can counteract that at the top level, I believe, by having a minimum of 2, ideally 3 different passports, by having financial resources in multiple locations and jurisdictions. And if that's beyond the resources that you have at the moment, then as an absolute minimum, make sure that you've got multiple bank accounts. I was over in Kuala Lumpur towards the back end of last year at a conference, and I actually gave Nigel Farage a lift, which is a whole different story, perhaps for a different day. People in the UK will probably know that Nigel Farage himself was debanked, and so he had his bank facilities removed. That has happened to a large number of people that I know. And the last stats I'm aware of, Jason, in the UK alone, it was something like 850,000 people have had their banking facilities removed. How would your life function? How would you be able to pay the bills, pay the mortgage, buy food at Tesco, whatever, if you no longer had access to a bank account? Ridiculous as it may sound in this modern age, I do think it's critically important to have multiple everything and escape routes.
Mm-hmm. Are you familiar with Doug Casey, Paul?
Yes.
I mean, you sound just like him, and he's one of the most legendary investors, been somewhat of a mentor to me. He's always advocated having some of your assets in a different jurisdiction for those reasons, and multiple passports for those reasons. So what you are saying only reinforces what someone I respect a great deal has been advising for a very long time, and it's sage advice, because those things do happen. So many of the things that happened in the last 4 years, people, if any of us would have made a bet in 2019 that we would see what we saw from 2020 to 2024, most of us, I think, would have said, I'll take that bet. I'll bet everything I have. And you would have lost. Just like if you would have made that bet to your wife, you would have lost.
Yeah. Actually, in a perverse way, I think that I won. The reason I won is because I call it the 3 C's. It's climate, cuisine, and culture. Living where I live now, the temperature is just a little bit different from the good old United Kingdom. The cuisine is just a little bit different from the United Kingdom, and the culture, for goodness sake, looking out my window here, not that I'm concentrating fully on you guys, but if I were, then I can actually see 3 different countries. I've got Monaco below me, and just over there I've got France, and I can actually see Italy's only 5 miles away. And compared to where I was brought up, and I'm not disrespecting the UK at all, but if most people ask themselves the question in the context that our time on this earth is limited and our job is to make the most of every moment, where do you actually want to put yourself for maximum benefit and your family for maximum benefit? Almost never would it be where you were born.
That's why I moved from Minnesota to Florida, and I echo a lot of what you're saying. Makes tremendous sense to me in every respect. I can't underscore enough. I hope people will listen to you, because I've been doing this for 35 years, Paul. So I have a little bit of a perspective, and so many of the things that you were saying to me or saying on this show have been reinforced through mentors of mine, through life experiences, business experiences, and just the gray hair on my head, that so many of the things that you are saying, I would argue, are the hallmarks and cornerstones of success. And you've already convinced me that what you are selling is probably undervalued. What you're charging is undervalued. And what you are selling is certainly quite a good deal, and teaches the lessons that took me 3 decades plus to have ingrained.
Yeah, thank you. That's very kind. But I think we're probably a similar vintage. I'm 60 years old. I'm a 64 baby.
I'm 1970 baby, so I'm 54.
Yeah. All right.
I think the commonality is that my family, I come from nothing. We started our company on a wing and a prayer in a 1-room office the size of a closet, with money lent from a friend, my father's friend, whose middle name is Franklin. My dad's middle name is Miles. And it was all through many of the things that you've said, the fundamentals of what you said that we've talked about here today without rehashing, that it's rekindling memories and lessons that I've learned along the way. So when I say that I hope people will take advantage of this, I'm dead serious. Everything that you have said, I have learned one way or the other, whether it be through life, business experiences, or through mentors. It all resonates with me. I'm glad you and Jason connected and you got brought on here today. Quite frankly, I've gotten more out of this conversation than several that we've done before, just by listening to your lessons and saying, yeah, that's right, that's important. Lastly, the one about jurisdictions and the possibilities of things happening that we never see, and income sources. Another mentor of mine, Richard Russell, used to say the most important thing is income. And so many things that you talk about are very important. They're not just, I hope people understand, not just talking points on the podcast. They're lessons to live by. And I would stake my reputation on that.
Very kind. Thank you, sir.
So while we've got such great guys on the pod, I'd like to ask another question, which is because we're talking about, again, resilience and how to better ourselves and succeed in challenging times ahead. But part of that is how we deal with things on a daily or weekly or monthly basis. We'll start with you, Paul, maybe. What personal habits or routines keep you focused? I know you're juggling a huge amount of different things, and productive. Are those personal habits or routines?
Oh, okay. So
sorry to drop that on you.
That's fine. And number one, it's relatively easy for me in the sense that, I don't know if you guys have heard of a guy called Dr. John DeMartini, very good friend of mine. If anyone hasn't read The Values Factor, I would recommend they do. So The Values Factor, which is one of John's books, is about our life's highest values. And it's a process to help you understand, it sounds like a big topic, what you're on the planet for, why you're here. And for me, my top number one goal beyond anything else is educating others. That's what I'm born for. That's what I live to do. Because every day's a school day. And I can't overemphasize the best single way to learn any discipline is to teach it. Because if you teach something, you expose yourself necessarily to these inquisitive minds of things called students, and they tend to ask difficult things like questions. And if you don't understand at a very deep level what it is that you're talking about, they will quickly expose you. So teaching, sharing knowledge, sharing pathways, joining the dots for people. So educating others, educating self. So I probably spend between 5 and 7 hours a day educating myself on business, financial markets, property, commodities. That's what I do. That's where that's me. That's where I spend an awful lot of my life. And I do look to, like Andy was saying, I do look to people that there's my Glint card. Look at that.
I want one of the gold ones.
Yeah. I do look to people that I massively respect, that are clearly successful beyond any measure in the world of business and investment. People like Warren Buffett. And when Warren Buffett says that he made all his money by sitting in his office and reading and thinking, I don't really know how many people actually understand what that means. They just think, oh yeah, he made a whole ton of money and then he just became a lazy person. I nearly used a bad word there. That's not what he meant. What he meant was he sits in his office and he reads and thinks. And a huge amount of the success that I've had financially, and compared to many people, it's not much because I'm not a billionaire yet, it's about understanding what happened before so that you've got a good grasp of what's going to happen next. And that really has been the key for me to accelerate my wealth. And then the third thing that I do is whatever it takes as a result of those first two things to become enormously wealthy. Because I normally say this will mean less to Andy and Mario probably, but if I was living in a 1-bedroom flat with damp in Milton Keynes on benefits, people probably wouldn't listen to me. And if I'm trying to make as many people financially free as possible, then being wealthy myself is a core to that. It has to be. Because if you want to be wealthy, why would you take any advice from a skint bloke?
Makes sense.
Why would you do that? And so it's another thing I teach my students, by the way, because I've got a particular focus here. Let me just very briefly explain the background to this. My dad was a teacher, history teacher, smartest guy that I know, spoke 7 different languages. Fortunately for him, retired at 60. And when he retired, the way that the pension system works in the UK is he got a quarter of his pension as a lump sum tax-free cash. He never had that kind of money. He was always a very modest guy, very modest lifestyle. And suddenly he had nearly £200,000 in the bank, which was just mind-blowing amount of money for him. He was banking with Barclays. Now, Barclays phoned him up and said, "You're a very wealthy man, Mr. Smith." He said, "Am I?" He said, "Oh, yes, £200,000 in your current account." So they sent a wealth advisor to see him. And this wealth advisor, you can probably guess where the rest of this story goes. Yeah. The wealth advisor advised him to invest in stocks and shares. And the wealth advisor, I'm using that in inverted commas, gave him a recommendation for a portfolio. Have a wild guess how many shares there were in this portfolio.
1.
Have a wild guess which share it was.
Barclays.
Correct.
That's appalling.
Within 6 months, he'd lost half his money. And then he told me what he'd done. So if anyone comes anywhere near you, not you, because you three would know this, if anyone comes anywhere near a person that's suddenly got more money than they ever had before, and they make some claim to be a wealth advisor, the number one question everybody has to ask is, how much money you got? You are not a wealth advisor if you're not wealthy yourself. You can't tell people how to use your wealth unless you are wealthy. And I believe that with every piece of my being. And it just frustrates the hell out of me that people with a suit and a whole list of questions that is basically a device that they put down the back of their trousers so they cover their backside with it when the reckoning comes. And the suit they've got is $50 suit. And I don't mean to be disrespectful to people that have got a wealth advisor title, but if you're going to teach me about wealth, you better be wealthy, boy. That's just
And a lot of the advisors learn more and more about less and less till they know everything about nothing. No question.
That's a good way of putting it, Andy. I love that way of putting it. So that's the three things I do, Jason. That's a hell of a long answer.
Yeah, no, thank you. Let's go to Mario. Mario, you've got this phenomenal podcast. I'm quite amazed, really, at the persistence that you have in being able to get up every day and wax lyrical about some amazing subjects and information that you give to your audience. What are the kind of personal habits and routines that keep you focused?
You said one already, persistence. The other one, discipline. And the other one is a little bit like Paul said, you got to have like a goal. And my goal is to wake the public up about our monetary system and how fraudulent it is. And yeah, I know that gold is just money and it's not an investment, but I try to tell people that it will act as an investment right now because our currencies are rubbish. So that's it. Persistence, discipline, and also this goal of letting the public know what our system is all about, because they're not going to teach you that at university or in schools because they're controlled by the big banks. So yeah, that's what I do.
I get it. And so Andy, one of your habits, is it bathing in a bath of gold flecks?
Actually, that's done miracles for my complexion. For me, I too spend at least 2-3 hours a day, every day, 7 days a week, reading, researching. It's changed my life, honestly, in terms of my YouTube presence and running my business. But as I said earlier, the finest gift I've ever been given was from my father, teaching me how to prioritize myself, how to pay myself first, how to speak to myself 20, 30 years down the road when I was just a young kid saying, hey, man, you got to save for us because there's a lot of things that you might want to spend now and forget about us when you want to relax and enjoy yourself. You better start doing that. And I've always thanked my father for that. It is the best gift I've ever been given, to respect and understand the laws of compounding, to have it work for you instead of against you, as most people do in life and are constantly trying to keep up with the Joneses by extending yourself and being on the wrong side of that compounding of interest or of time. So for me, it's about always prioritizing yourself, getting better, learning more, constantly evolving, but prioritizing yourself first. Pay yourself first, no matter how small it is, and let the laws of compounding be your friend instead of everyone else be chasing you down the street.
Yeah. And I think the other thing for me really is, I don't know if it's a curse or it's a gift, but having a vocation, having something a vision for something that you really want to achieve is important. I know somebody who visualized it and pictured it and put it on the wall above his desk, like what he was driving towards. And that I was just talking to him on just last Sunday night, and he's achieved everything that was in that picture. For me, really, it's about bringing sound money to the world. And I'm less on the educational front. You guys have been doing the educational stuff really well. But that vocation and having that vision and having something really meaningful, I call it a curse sometimes because it can take over your life. And that might be unhealthy sometimes. But I don't know, you got to try and get this balance right. I'm not sure I get it right all the time. But you've also got to have a healthy dose of delusion about your success, because you're going to be hit all the time through life with challenges, with problems. Around every corner, there's something to trip you over. And you've got to have, I think, that resilience that we talked about earlier on. You've got to have really a self-belief that you can go and do that. You can achieve this. You've got to have the confidence to do that. So, yeah. And then lastly, something I don't really do a lot, as much as I should, but it's my New Year's resolution is also keeping fit. My mind is so much more clear, and I'm certainly less tired during the day, and I sleep better. I have much more productive thinking when I'm fitter, and I've been loving it. So I'm pleased to say that, last week I went to the gym about 5 times. So long may it continue. We'll come back on that one and see how far I've maintained it throughout the year. But listen, we could talk for a long time. I'm sure we could all keep chatting forever. maybe 1 or 2 words just very quickly on visions for the businesses. What are you trying to achieve this year or for the next few years, Paul? What's the thing you want to do very quickly on that?
Okay, so I'm 60 now. By the time I'm 65, I'm absolutely crystal clear that I'm going to be a billionaire. I know a lot of billionaires in Monaco, and I'm increasingly spending time with them. So why is that relevant to anybody else? If this kid from a Yorkshire pit village can transition completely from 17 years old, 170 pounds, through to billionaire living in Monaco. Second one is on a personal basis. Andy was saying he's fortunate and blessed to have children. I've got 6 children. I've got 2 grandchildren so far. So huge part of my plans are to ensure that generational shift. The point of me building it all just so that they can destroy it all, isn't there? So not that they're going to. That's the other thing. And the third element is that I'm absolutely determined to create 1 million millionaires.
Amazing. 1 million millionaires. That sounds like a good slogan. And Mario, what's your goals for the podcast and whatever else you're working on at the moment over the next year or two?
Just to keep doing the same, keep trying to wake people up, because a lot of people won't listen. And yes, maybe do some different kind of content, interview people more as well. And I'm going to go also to Kuala Lumpur this year. I think it's probably the same conference that Paul went. So I'm looking forward to that as well. And just keep doing the same. When I started my channel, I didn't write down a plan. It's just evolved. So that's how I'm going to keep doing it.
Sounds good. Andy, Bullion Baron, you're going to build a house made out of beautiful gold bricks?
Yeah, maybe pave my floor in Morgan silver dollars. I don't know. I'm the embodiment of the American dream, and very similar to Paul. Started from nothing and reached levels that I still am. I thank God every day that I have, and yet I continue to move forward, and I continue to work maybe harder than I ever have, and at the same time securing my future for my family's future and the future generations. I have 3 kids and no grandkids yet. I think part of all of this is liking what you're doing. And, I love what I do. I feel blessed, and I keep on going and try and share as much as I can with the public to help them protect what they've worked so hard to obtain. Maybe taking Paul's classes, they become millionaires and centimillionaires, and I can help them preserve a little bit of it along the way. That would be fulfilling and would be a worthy outcome for me.
Great. And for me, I think a lot of you might guess my vision really this year or two is to really take the concept of transactional gold as a sound money platform to the world. The focus is in the United States. We've got amazing opportunities with even US states now across the country working to make transactional gold legal tender, and really love working with those people who are driving that forward. Health is also wealth, and it's important that you're resilient when it comes to your health. I need to focus on that. I felt very unhealthy about a year ago and on a road to health, which is getting stronger with me. And of course, last but not least, what's the point in doing all of this if you can't spend good time with your family and friends? And I'm enjoying meeting new people as well and building longer lasting relationships. So I'm very excited about that. Just before we go, the last thing really, Paul, if you could give one piece of advice to somebody starting their property investment journey today, what would that be?
Oh, it's easy. Almost always when I sign off social media, I say, you've been wonderful. I've been Paul. See you next time. Most people don't. So to deconstruct that a little bit, most people don't understand how incredibly spectacular, unique, and fabulous they are. The chances of one of us existing is hundreds of millions, if not trillions to one. You are all unique, superb human beings. There's only one person that's going to stop you from achieving whatever it is that you want to achieve, and that's you. So just believe in yourself. The rest is easy.
Mic drop. Boom. Amazing. That's beautiful, Paul. Thank you very much. Mario, so good to see you. Andy, great to see you as ever.
Likewise. Paul, I enjoyed this very much. Jason, thank you for having us. And This is a keeper.
All right, all you beautiful people out there, thanks for joining the show today. And make sure you come back next time and subscribe. And then, of course, you'll be alerted next time we publish a pod. There's another one going to be published very soon. It's going to be really interesting. And thank you again for everybody. Take care, keep healthy, keep inquisitive, and keep resilient.
Bye, guys.
Bye.
Bye. Thank you.
Thank you.